Okay, so welcome into the Quant Traders Workshop. First slide, just going to go through a quick risk disclosure here, make sure everybody that is attending tonight's workshop and those of you watching the recording are 100% in tune that there is risk not only walking out your door without a mask, so they say, but also there is risk in trading anything, futures, equities, FX, cryptos, cannabis. Heck, there's probably even risk in trading the flour and butter with your neighbor across the street. But anyways, all fun and games. So I'm going to spend about 5 minutes just kind of going through some what I call basics. This is really for those of you that are just starting out your trial. You've watched a few vids. Members, you could probably just go grab that quick libation that you want to grab before we get going here. That's go grab a Fresca. So, first thing you guys got to know is zones. We're going to be helping you guys out tonight, identifying where bull and bear zones are. You're going to see me show trades that I've had here as of late. I'm also going to introduce one of your peers, a couple of traders that have actually sent me some trades. I think one's actually here tonight. So you're going to see some of my trades, some of your peers' trades, and Joe's got some stuff for you too. In line with some of his swing trading and in his equity trading. So everything that I do in the trade lab, when I'm identifying bull and bear zones, I'm trading futures. I've been trading futures for a long time. I love them. I like the quick play. I like to know where I am by the end of the day. And that's why I'm a day trader. Some of you guys like to swing trade, hold on to your trades for 1 to 2 days, 1 to 2 weeks. That's great. We can teach you how to do that too. So do you know when to buy and when to sell? Do you know if you actually are in a bull or bear zone? We're going to help you with that. And we're going to actually help you also identify if you have high or low probability in those trade decisions that you're making. So on the left-hand side, what you're seeing is what I like to refer to as a naked chart. That would be the S&P. When I took this snapshot, nothing on it. Very hard to be able to identify where to buy, where to sell, where to add, where to reduce, all those questions I have on the screen there. But on the right side, same market, same snapshot, just a different look. So this is a paradigm shift for many of you with your trading, just trying to help you put another set of glasses or a different shade of glasses or a different lens, if you will, so you can actually see where the market has been, where it has tested, where it might be going, and where it might be testing once again, or in a different location, different zones. So these different zones, everything, all the jargon you hear me use in the live room is here for you. So take a snapshot of this. Oftentimes I'll pop up what I like to call the map to the money, where I'm actually showing the road map with all this different jargon on the right-hand side. So this would be a good time to ask questions on that. And I'll stop as I go here tonight, and we'll pull off to the side. I'll get Joe into the mix here in a few minutes too. But there's a bigger look at it. This is a really great way for you to identify, the green levels are the core. Those are the most important ones because these are identifying the bull and the bear zones, right? And then up here you have critical resistance, also referred to as R3. This is where I often say that the market is full tilt. It's reached its last goal line. So if you're able to capture a trade at the beginning and take it all the way up to the top, that's fantastic, right? That's all the more profit in the trade. So this is a great representation of showing you all the levels and all the zones. This is the basket that I trade. You guys can go to thetradingroom.com and you can see where I have been for most of the year. I'll help you. I'll save some time right here, right now. I've been trading the NASDAQ the most. I've been trading a lot of the Dow. I've had some pound trades here as of late. And crude is where I've actually been negative this year, although I don't stop trading it because I know that I'm just one trade away from being positive. And gold, this year, those have been the areas where I've had the most trading. Now, I'm actually going to show you guys a trade that's setting up right now for copper. That's right here, right now, inside of the London session. In fact, shoot, I just missed it. I was looking at this literally 5 minutes ago. This is a 5-minute chart, and I was saying, hey, let's get a trade off for the workshop, and it just qualified literally 5 minutes ago, and it just dropped. So I'm kind of bummed out because I wanted to do this one live for you guys. You see this box I have over here? This is a box trade. This is the Asian session that just opened up prime time, 8 o'clock to 11 o'clock. And I put this box in here. So this is not anything special. This is just me putting literally a text box in NinjaTrader and putting this up on the screen based off of time for the left and right side of it and the levels for the top and the bottom of it. So think about what I've been sharing with you guys and now apply it. We can now see we're inside of bear zone 2. There's the green level up there. And we have just had the RQ navigation indicator, which is basically just a color, showing us strength, moving to neutrality, yellow, turning to weakness in purple. So if I had have had this screen up while I was doing the intros, if I only had another set of eyeballs, I'm telling you, if I had not have gone to get that Fresca, Dennis, I could have had some more money. Mark, you're drinking a beer? Dennis has got a Fresca. Yeah, let's play. What do you have in front of you? I've got actually some soda water with a pineapple flavor. So feel free to tell me what you're drinking, guys. We should probably do a virtual happy hour with the members. Careful trading and drinking. It's a dangerous mix, guys. Don't recommend it. All right. So, anyways, let's watch this one. I was gonna try to get that one done for you guys live. Unfortunately, I wasn't able to. But you know, if I had to put this trade on, the reality is I was gonna place a sell stop as soon as it turned purple, right below the channel break. And if I put a Fibonacci ruler up on this guy and just place a ruler in between the levels, this helps me find targets. And take a look at that. That just went down to the 50 and kissed it, and that's a target. So there's already been money made on this trade in the first 5 minutes in the Asian session. Guys, it's 8:11 at night. This is a prime time. Another market that I like to look at during this prime time is the Aussie. And I see that there might be an opportunity to buy it in the bull zone. See the upper levels here. Okay. And then, of course, related to the Aussie is that next island over called New Zealand. So this is the New Zealand dollar, and this is bull zone 2, a potential break higher through the night. You can see it's weakening as we speak. And then, of course, what I like to do is look to see if there's any reports. So I'll just go over and capture. Yeah, FOREX calendar's got a good report system I can follow. So looking to see when the next report comes, and that's at 9 p.m. That's going to affect the Aussie dollar, which will affect the New Zealand dollar, which will affect possibly the U.S. dollar. They got some inflation expectations coming out tonight, and also an employment change and an unemployment number. So definitely the Aussie will be affected. And guess what? We have all of those things tomorrow for the U.S. in the morning. So I like to look at the Aussie. I like to look at the New Zealand. I like to look at copper. Let's look at gold and see what it's got going on. Not much. Pretty quiet right now. Now you think about all those markets that I've talked about, and I showcased earlier this basket of markets here. So how do I decide on what to trade, right? I mean, there's so many markets. Everybody says, God, you're trading too many things. I just like to trade the S&P. Hey, that's great, man. Live and die by it. Knock yourself out. I've kind of been doing this for a long time. Kind of know what I'm doing, and numbers don't lie. Go look at the performance. Why just trade one when you can trade many, many more? Why just trade Microsoft? Why would you live and die by only trading Microsoft or only trading Tesla? And I know what you're thinking. Well, God, you'd be a millionaire. Actually, you're wrong. You'd be a billionaire if you started 15, 20 years ago. Fact is, I'm just trying to use this as an example. You don't just trade one equity, one stock market, or rather one stock individual company. You could trade a whole index. You could trade related indices. You could trade multiple currencies. And the great thing about all these markets, guys, is I can make money going up and I can make money going down on any given day at any given time. Okay, so I use this tool right here called the RQ Tech. And this is going to show me all those markets. different look. And if I click on the net change, you can see the second column is showing me positive to negative. And if I click net change again, negative to positive. And if you look from left to right, I got the instrument, I got the net change, I got the next stream. The next stream, just pay attention to the time frame, 1, 3, and 8. These are reading. Joe's got an algorithm in here that reads the last 1, 3, and 8 hours, and it helps identify what the trend has been and is. Okay, where have we been and what's going on now? And then over here, look at the risk off. That's the sentiment. Very, very important to know what the sentiment is. And the reason for that is because that's going to tie into the list of logic when we have a risk on, risk off, mixed, or a bullish, bearish sentiment. You see the markets that I have in the boxes. This is going to help me correlate what to trade and what to buy or sell. If it's yellow, either direction. If it's red, sell, green, buy. So this is why sentiment is a really big deal. Okay? Okay, so let's put that copper back up since we got that market moving. Something to talk about, something to look at. And by the way, that's the micro S&P. The S&P right now in the middle continues to be in the middle of the bull zone. Going back and looking at midnight, these levels adjust every 24 hours at midnight. So I can just put up here real quick. I can share with you the different prime time spots. We've got the London session from here to here. We've got the US session from here to here. Okay. And then the last one, which is the current one, is the one that we're in right now that's just started, which is the Asian session. So we got these different prime times. It's very important, and we got a whole workshop on that. So let me just get this copper on in the background, and then I'm going to continue on with a few more slides, and we're going to get into some specific trades. Okay. There's that copper. I'm going to take this out of the way and make that easy to see. Okay. So continuing on, talked about the basket of markets. Let's get to the next slide, which is talking about the different styles. So the 3 different styles that I use inside of the Trade Lab, which I open up at 9:15 and trade for, actually, I'll trade till, I usually trade until I hit my goal or until we, I get to my last trade. We're about to finish up the morning prime time. I'll pass it over to Joe. Sometimes I'll finish off at 10:30. Sometimes I'll take it all the way to 11. If I've reached my daily goal, then great. If I haven't, then I'll check out the markets later in the afternoon. And I'm using these styles: box trading, which is what I just shared with you, with that channel breakdown with the copper. Scalping, which these trades last anywhere from a few minutes to, if it's over 15 minutes, they usually don't last that long. Unless I've got a couple of units that I'm just letting run and I'm using a trailing stop. But usually those trades are under 15 minutes in length. And then we got retracement type trades where we're looking for an indicator, which is called the OBOS, overbought, oversold, that kicks out and gives me an indication that the market's about to potentially retrace, sometimes reverse. And we want to take advantage of that based on the location in that last word you see there, based on the location of the zones. And the one thing that all these 3 styles have in common is that they're all dependent on having the levels to understand where the zones are. So the trading technology that we're teaching and preaching and showing you here in the workshop tonight and in the trading room, the live trading room tomorrow morning, we have a very simple goal. It's to basically just make smart, logical choices to increase our chances of success. We're trying to stack the odds in our favor, guys. There's no magic, just a matter of taking some technical indicators, taking some fundamentals, putting those 2 together, and that's the basis, if you will, of quant trading technology. And then, of course, some of those tools that I've already mentioned and a whole lot more down there listed at the bottom that helps us make our decisions. Okay. So I think from there, I'm going to now transition over to some trades. Okay, so I'm going to start off By the way, Mark, I do see you in here. So Mark, I'm going to bring you in here in about 15, 20 minutes. So stand by, buddy. Crude oil. Let's talk about crude first. So I'm not going to just show you guys profitable trades. You guys are with me in the trade room. You guys see this, I think the last 2 days I've gotten licked right out of the gate. I think it was gold yesterday, crude today. But the one thing that both of those markets and both of those trading sessions had in common is I got hit on the first one, lost money, and got right back up and made money. So this is an example of that exact scenario happening. So what I'm going to do here is I'm taking a look, and this trade took place. This was yesterday, 7/14. This is crude oil. And I'm just going to put a couple lines up on the screen to identify prime time. So 8 o'clock to 11 o'clock. So that's the unique time that we want to be looking for volume and volatility to be peaking, looking for opportunities in between those yellow goalposts. You guys by now know what the levels are. You know what the zones are. So it's fair for me to look at any market, guys. This is what's really cool. You could look at any market, any stock, any commodity, any currency, and you could just have a quick glance and say, yeah, it's in a bearish trend quickly. In fact, if you got a friend, try this tomorrow. Hey, what are you trading today? Hey, Hey, give me one market in your portfolio. And you can tell them where it sits, if it's in a bullish 1, bullish 2 zone, if it's beyond critical support, beyond critical resistance. Think about a buddy of yours that's trying to get out of a trade. Maybe he's holding on to Wells Fargo. Maybe he's holding on to, maybe he just recently got into Delta, who made their number. Maybe he's holding on to a long position in the NASDAQ that took a beating today. I don't know, whatever it is. But ask your trading buddy, say, take a look and find out what he or she's in, put it up on your chart, and tell them what you know. Tell them, hey, you know what, bud, that thing is on its way to critical support. You need to bail. You need to bail now. That's a great conversation, and you might just give that friend the best tip he or she's ever had, and they might just end up in the trading room with us. So, here's crude oil, and what I want you guys to identify is the breakdowns happening almost in sync with the bear level. Now, the double channel breakdown is right inside the neutral trade zone. I like that channel personally to be inside the zone itself. Truth be told, though, it's so close that this probably would have been one if I was trading yesterday morning that early. I would have been taking a look for a nice little sell-off. And in fact, that's exactly what it did. It looks like this one went down and reached 25 and also a 50% target. That was not the indicator I was trying to put on the screen. Let's try that again. Trying to put something else up here for you guys. Here, I'll just do it right here. Fibonacci retracement ruler, just drag that down. And as you can see, this thing went down to the 25 and it got right down to the 50. Now look, that's where I got into this trade, because this is when I started trading with you guys at 9:30. Okay, so squeezing this out now and looking at 9:30 forward, this market was breaking. And I saw this channel down here that it was breaking. See the purple line down there? It was breaking that purple line, and I placed my sell stop a little bit below it, got filled. Woulda, coulda, shoulda. As I look back at this trade with you guys here right now, I sold right before the 50% marker, right before 50% of the way into the zone. That is a very dangerous trade, because you want to actually place it beyond the 50. Can it break 50% of the way down? This one actually just tested, and that one caught me. So it went back up. I had my stop. In fact, the second stupid thing that I did, that's right, I said it, second stupid thing I did is I should not have had the stop up above the bull level. I should have brought the stop down and had it right on the inside, right where that yellow candle is. Right when it came back up in here, I should have just called it quits right there. It turned yellow. I saw that it was losing momentum. I stood it out, and that was just stupid. Lost more money than I needed to. I just did a one lot, but nonetheless, I waited another 5-10 minutes, and look what I did here. I bought the market. Now, I bought the market. I'm going to go ahead and erase some of the things that I have on the screen here, because let's see if I can get rid of this over here too. Thank you. Thank you. Because we were breaking from yellow to blue, and we were breaking a channel. We were starting to show momentum again. Now you might think, well, hey, why didn't you just reverse it over here? I probably should have. I absolutely probably should have reversed it here. I could have. That was an option. With box trades, guys, I like there to be a few minutes in between my trades. Technically, I like there to be about 30 minutes between my trades for box trades. This one only had 5, 10, 15. And I'm trying to think of what was happening yesterday. I know we had some reports coming out at 10 o'clock yesterday. That might have been what influenced me to get into this market. Nonetheless, what I did is I bought one, and the market, let me just take a look and make sure I got my, see, I sold one, bought one. Oh, you know what? I did reverse it. Had to look at the quantities to get that. If you take a look here, I initially sold one. I bought two. So this is where I reversed it. That was the channel. We were breaking into the bull, bought two, and I separated my stops. Looks like I actually bought two, bought another one, got one stopped out, and I took the last, was it one or two? Got to go over here to look. Took the last one, never went much higher, and see what I was doing here? Holding on, holding on, holding on, looking to see if we're going to go higher. And when it came back down, started shifting to yellow again. This is in the afternoon. Had to stop underneath the level. Now, this was a resistance level that then becomes a support level. Okay, and as you can see, as the market went, we actually had the afternoon session, which is right in this time frame here. And by 2:30, which is right here, the market wasn't going anywhere. It stayed sideways. It stayed in the neutral trade zone, and it was a profitable trade on the second one, but that first one was a lick. All right, so a winner and a loser there with the box. Let's look at another box trade, and this is a trade I actually had last night. Before I actually get to that one, let's look and see how the copper's doing here. Keeping an eyeball on it. Looks like it's at the same spot. We'll come back and take a look at that a little bit later. All right, so the second one here is a trade that I did last night. For those of you guys who are in the trade lab, I showed this as soon as I started the room. So something that I do before I go to bed is I'm in Southern California, so West Coast, I have the advantage of not having to get up at 1:30 or 2 o'clock in the morning if I lived in the East Coast of the U.S. Of course, if you're over in the UK and the surrounding countries with only an hour or two difference, then that's nice because that's your morning. But for me, right around 10, 10:30 at night, which is going to be 1:30, 2 o'clock in the morning, Eastern time, that's when I start scouting and looking for opportunities. What am I looking at? Well, I'm using the RQ tech to see what's leading and lagging. I am looking at the news. I am looking at reports, right, to take a look. In fact, if you were going to be trading in the London session, should I say tonight? Tomorrow, 2 a.m. Thursday, look at this. You've got some reports. You got the unemployment coming out. That's going to affect the pound. It's going to affect the euro. That's going to affect the Swiss. That's going to affect the yen. That's going to affect the dollar. Great time to be trading currencies. You've got some trade balance out of Europe. That's going to affect the euro, right? So you want to see if there's going to be any reporting because volume and reports are going to push markets. Okay, so you've got to have that volume and some volatility to be able to have a chance. Well, last night I saw an opportunity as the pound was one of the leaders. I think it was the pound and the Canadian that was leading. And started seeing, you can't see it right now, but the candle that I actually entered off of was toggling back and forth yellow, blue, yellow, blue. This is a 5-minute bar. And if you take a look down here, this is the sentiment. So I could see that the sentiment was mixed. Let me help you put the logic together here. If I bring this into the mix here, take a look at the logic. The logic tells me that when we have a mixed sentiment, look for currency plays. And that's exactly what I was doing. And I pulled up the RQ tech, which obviously was different than it is right now. But like I said, the pound was one of those that was leading. As it turns out right now, the strongest currency in real time is going to be the yen, the Canadian, and the euro. So what I'm going to do is I'm going to pause right now, and I'm going to introduce you guys to Mr. Joe Rios, because I've been going for almost a half an hour. I want to get him into the mix, see if Joe's got 2 cents that he wants to put in on this trade that I did last night, maybe talk about the channels or anything else. And with that, everybody say hello to Joe.
Hello, everybody. EP, can you hear me? I got a new mic.
You got a new mic. All right, man.
So
we started that GoFundMe for you, so hopefully there was enough money in there for you to go get it.
No, I'm going to use that money to buy a new Porsche.
Okay, that's great. Get one of those. Get one of those. What are the uni muffler? The boxers. The boxer purse.
911. Sorry.
911. You're a
I'm
career.
already on a couple 911s.
All
Can't
right,
go back.
man.
Can't go faster than that.
So, thoughts on this trade, Joe? Anything, any color you want to add to my thinking at the time and my scouting or anything of that sort?
No, it's a classic.
Yeah, it is a classic. I'm going to put the box on here. So, just like I showed you guys with the copper, here's the box for the Euro session 2 to 5. Okay. And what I did is I placed an OCO order cancels order. And when you place an OCO order, you basically have it, when you get filled, you're going to automatically have a stop and have a limit order go in. And when one of those gets hit, the other one will automatically cancel out. So that's the type of trade you're going to want to set when you're going to be away from the screen. So literally, I calculated the number of points. And by the way, for protective stop, I had counted how many points away I wanted that stop, and I was looking to have my stop right below the opposite channel, the lower one here. So that's how much risk I was going to put on it. And I calculated, initially I calculated to that level, but the reality is I said, you know what, I'm just going to let this one run. I was going to be very comfortable. That was going to be about $250 for the 2 lot that I did. And I'll just share with you guys the number of units here. Take off the text because it just sometimes is too much on the chart. So bought 2 here, but right before I went to bed, I made a very good decision, which was, nope, let's go for a limit order at the top. So when I started the room today, this was 9:25 this morning, I just missed the target. We literally came like 2 ticks, and I was going to be, I kind of got a little greedy. I kind of held on to it. I was going to lower it just to get it filled, and I said, well, you know what I'll do? I'll bring my stop, which was originally, once again, originally down here. What I did is I woke up and I saw how much profit I had. I quickly placed a stop here. And then when I realized I just missed it and it started coming back off, I put my stop at the halfway point. And that's where I got hit. And as you can see, that was a good move, right? So that was a nice, that netted about $312 per contract. And I refer to that as a swing trade, guys. So that's a box trade strategy to help me identify it. But when you think about it, the box ended up being from 2 all the way through into the US session. And if you go right to the open of the stock market today, that's where it turned. Okay, so we are at the bottom of the hour. So what I'm going to do now is I'm going to bring up one more trade, but guess who's going to take us through this one, Joe? It's not going to be my trade. This is going to be one of our members, and that member tonight is going to be Mr. Mark. Mark, let's see if your mic's working, bud. You got to unmute yourself. I'll send you a note there. Let's see. Go ahead and try it again, Mark. I think I just accidentally muted you. And if you have problems, let me know. Okay, so I'm going to bring his chart up just in case he doesn't get his mic going. And by the way, Mark, you have a, go to your audio, and it says that you are muted, so you have to unmute on your side, bud. All right, we'll see if he gets a fix. Here's his trade. And he actually followed me on a trade. I think it was day before yesterday in gold. No, it was the Dow. My bad. This is the Dow, and this was back on. Not sure if I can see the date on it. I'm gonna have to probably guess that this was yesterday. I believe this was yesterday or the day before. I can't remember. Let's see here. I'm just trying to see if he's got his mic going. All right. So it looks like Mark bought the micro Dow, and he actually had a total of 4. And if you guys note the location, I can see if I can make this a little bit larger for you. There we go. It's a little bit more clear. This was a bull zone 2 trade. He bought his 4 micro Dows, and I'm trying to see what he was doing. It looks like right here is the qualifier. Yep, that was the qualifier. We closed right on the top band. This is a turbo scalp trade. And what he was waiting for was the market to move a little bit higher. It didn't on the next one. It took about 2 minutes. Again, this is a 1-minute chart, right? This is what we use for the turbo scalps. So if you can notice the white dot line, you see how it goes up, 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 up. That's a new high. So that's showing you the high of the day. And what he did is he waited for the 75% mark in that zone, and that's where he took off half of his position. So Mark bought 4, escaped out of 2 with some profits. I'm going to guess, and unfortunately I can't have him tell you, but I'm going to guess he went break even at that point. He probably originally had his stop below the RQ level. No sense in placing it all the way down below the SMA, the simple moving average. Use the levels as support. You hit that profit target, and it's at that point that you're going to want to go break even. So that's where his new stop is going to reside. And he held on for another 1, 2, 3, 4, 5, 6, 7, 8 minutes and was able to escape with the other 2 coming out with his protective stop, never in fear of getting hit. So that's a beautiful little trade there inside of the bull zone 2 for the micro Dow. Looks like he bought at 55 and got out at 77. So if you do the math on that, he made 22 points on the first set. That would be, let's just do some math on this. 22. You want to multiply that by 5 for the mini Dow. And that's going to equate to $11 per micro. So if you made 22 points times 11 times 2, he made $48 on the first 2. Let's make sure I did the math on that right. 22 points times 5 equals 110. So $11 per. So you made $11 per point times 22 points times 2 contracts. Yeah, $48. So for some reason that just didn't register right. I'm going to just double check my math, guys. 22 points times $11. No, he didn't make 242. That doesn't make sense. Joe, you got to help me with the math on this. For some reason, it's not registering. I'll let you guys figure it out. For some reason, 22 points times on the mini, it would be $110. So I'm sorry, he made 11, so it's $22. There we go. 22 on the first 2, and then 92 minus 55, he made $37. I'm sorry, 37 points on the last 2, which is $185 on a mini, so it'd be $19 times 2. So what is that? 38. So 38. He made $50. $50 when it's all said and done on micros. And I know the size account that Mark's trading, and I know that he was pretty damn happy about that trade. I'm not sure if he had any others that day. I want you guys to note what was happening at the end of this trade when he was done. Do you guys see this up here? These yellow dots and the red dot. Joe, why don't you tell everybody what those are up there?
The yellow dots are overbought markers, and the red dot is a retracement marker. So when you see them on top of prices, the yellows are overbought, the red is a retracement marker. When you see them in the bottom of the price, then the yellow is oversold, and then it would be a green, not a red, and that would be a retracement.
Yeah, and that's exactly what it did. It's funny, sometimes you'll see these retracements stack up, and there'll be like a delayed reaction for the retracement. I see that often, actually. This is an exception to that. This is where after the retracement signal came in, it actually did just that. And yeah, this is one you could have captured. I personally, Joe, would have had a sell stop if I was going to go after it. I would have had a sell stop right underneath the RQ level. And I would have, if I take these trades, I tend to like to do multiple contracts. I'll take one off real quick, and I'll just let the other one run and go break even, just in case it's like a reversal. Just in case it's like a really big break, this retracement turns into a reversal. Just depends on the time of the day, what's happening, reports, all the rest of the logic.
A couple observations. If you notice in the bottom, the DMS, we were in risk on, and that is a zone 2 trade, which is fine when you have risk on. If it was a mixed market, markets in conflict, I think Dennis asked earlier, what's the blue in the bottom in the DMS? That's markets in conflict. So there is risk on. You feel comfortable. You should feel confident in taking a zone 2 trade.
Yeah.
Not when it's mixed, not when it's in conflict, and not when it's risk off, not on the bull side anyway.
Yeah, good point. Yeah, in fact, yeah, it's funny. There was only just one little time that we had a mixed sentiment, and we were risk on for pretty much all that time frame. Okay, I'm going to exit out of this guy. Mark's going to try to still work on that audio, guys. If he comes in, I'll let him talk a little bit more about it. I'm going to shrink this back over, go back over and just kind of check out what's happening with the copper that I recognized at the early part of this session. So as you can see, it's actually churning right now. In fact, speaking of sentiment's kind of been all over the place here the last 30 minutes. We've had some mixed, turning to conflict, back to mixed, and see what's happening right now in real time. You've got the candle going back to neutral. So copper seems like it's gone about 50% of the way down into this zone. And it seems to be kind of cool in its jets right now, doesn't it? That's what it looks like. Okay, so I could talk about more trades. Joe, do you have anything specific you want to look at? I could transfer over to you before I pick off some others.
No, not really. Everything I pretty much covered this morning. We've got Dan came up with several trading ideas on stocks, and so we actually took, I believe, 2 trades. Yeah, we took 2 trades today. One of them is the ETF on the Bitcoin, and the other one is NASDAQ, not NASDAQ, the the QQQs, NASDAQ the company.
Okay.
So we'll give it a week or so, see how that pans out. That's more of a precision trade. So I encourage members, if you have some stocks you like, or you have questions on some potential stocks for swing trading, precision trading, send them to me. Let me know. I'll review them. I'll give you my 2 cents, my analysis, and if it meets the criteria, we'll buy it.
Okay. I am going to play with a little experiment here. I want you guys to see this. So what I just did, this is yesterday, guys. This is the 14th, and this is the Dow. And I'm going to show you guys how many qualifications starting at 8 o'clock there are with this strategy. Now, this is the turbo scalp strategy. And as you can see here, the market actually was breaking the lower band. I'm just going to put the circles on the qualifiers. So there's one there. I'm going to put them on first, and then I'm going to come back and talk to you about all of them. One here. One here. This is when this line here is the stock market opening. One here, that's a counter. This is one using the SMA. And here's one here that I actually took. Okay, so let me make sure I got them all. Let's see if there's any others. No. All right, so yesterday, in this 3-hour time frame, every one of those circles that you guys see are qualifiers. They're trades. 1, 2, 3, 4, 5, 6. That's pretty much a standard. Usually anywhere between 6 to 8 is a standard. The more that you have, then you have a really choppy market, and those are not good conditions. I don't know of anybody that can make money when you have a sloppy, choppy market. That's just not what we're looking for. We got to have a move of some type, and this one was a bearish move followed by a bullish move in a 3-hour time frame. And if you really look at it, from 8 to 9:30, we had a bearish move, right? From 8 to 9:30, we had the market moving from bear territory about 3/4 of the way down. Stock market opens up, and the market's rallying back up, going into the bull territory, and rallied up only a little bit before it came back down into the neutral. Okay, so now that you have that information, which I only know because I've got the levels, I only know because I have the ability to see the map, now I can go look for qualifiers. So with the turbo scalp strategy, what I'm waiting for over here for this first one is I'm waiting for the market to close on or below the lower band. That's exactly what took place here. For those of you following, this took place on the 14th at, come on, 8:19. 8:19. But what didn't happen is you didn't get filled because you're going to place the sell stop below that bar when it closes. And as you can see here, it doesn't go lower. It goes higher. But I have what I call the 7-minute rule. And this is all inside of the e-guide that we send you with your membership. So 7 minutes starts with the qualifier. So count with me. 1, 2, 3, 4, 5, 6, 7. And there's the hit. That's the fill. So you wait 7 minutes to get filled. So tomorrow, if you hear me say, hey guys, we've been in this trade for 3 minutes, we'll give it 4 more. Now you know what the hell I'm talking about. Hey guys, we've been in this trade for 7 minutes, I'm going to kill it. Now you know what I'm talking about. And look at this trade. Guys, this thing gets filled somewhere close to, let's call it 26,080. Okay, hypothetical. 26,080. That's your fill price. Here's how I measure the risk. I'm going to measure the risk by looking at, okay, I'm trying to get filled here. So as the market's coming down, I'm going to eyeball, where's my stop? I want my stop to be above the SMA, the simple moving average. You could also use the RQ channel. I'm sorry, the RQ level. But I'm going to give it a little bit more distance because I can see where the market has been back here. I'm going to allow it to go up and test that SMA again. And I'm going to keep my stop up there. Now, we didn't get filled. Had we had gone lower on the next bar, I would have been stopped out right there. But we didn't. You get hit here, and your stop is up above the SMA. And that distance is your risk. So if you're getting filled around 26,080, and the stop is now, I'm going to have to put a crosshair on it, 123. So let me just write that, 26,123. Hey, Mark, you got your microphone going, didn't you? Sounded like you might have fixed it. Mark, can you hear me? Mark, you're unmuted, so you can talk, bud. He's working on it still. All right, what did I say? 26,123. 26,123. Okay, so what I'm going to do is I'm going to calculate the difference between those two for the risk. Yeah, that's why you see me pop up a calculator in the room. 20, I put 23. That should be 26, 123. 26, 123 minus 26, 080 is 43 points. Okay, now the mini Dow is $5 a tick. So I'm going to multiply that, 43 times 5. And the micro is a 10 for 1 for leverage. So just divide that by 10. So $21 is the risk per micro, $21 per. Now, just make it really simple. If you have a $10,000 account and you're going to risk 2%, that would be $200. So 200 divided by, what did I say it was, $23 of risk per? You could trade 8 to 9 lots on this trade, 8 to 9 lots. And you'd be short right where I have that arrow. Okay? And now what you're doing is you're looking for profit targets. You have your stop. You know where your stop is. Let me squeeze this a little bit more. You're going to go get a Fibonacci retracement ruler, and you're going to draw a line from level to level. And look what we have here. We got your first target that's being reached in a matter of 1, 2, 3, 4, 5, 6 minutes. There's target 1. 25% of the way down, or 75 from the bottom, however you want to look at it. That's target 1. So if you had 8 lots, take 4 off. Cancel, replace your stop. Trail using the SMA. Keep it up above. Trail, trail, trail. Try to get to the 50% mark, but you don't, because what happens? You're getting stopped out over here, almost at the same identical spot of where you got your first 4 covered. Okay, so that's a profitable trade. The trade ends right there. I'm going to erase everything now. We're going to get on to the next trade. So the first trade out of the gate is a profitable one. Second trade is at 9 o'clock. I'm going to share with you guys, between 9 and 9:30 is not a very favorable time to trade. 8 to 9 is good. 9 to 9:30, tough. Usually the market's going to go choppy and quiet. So what happens here? You got a qualifier. The market doesn't go lower for 2 more minutes. If you took the trade, guess what's happening? You're getting stopped out. And the reason for that is because you got your stop up above the SMA. So that's a loser. So this is a winner. This would be a loser. And you ask yourself, how do you avoid losers? Look at the time. It's 9 o'clock. That 30 minutes prior to the stock market opening, sloppy time to trade. Let's go to the next one. Stock market is now opening up. It's 9:30, designated by this bar here, 9:30. And out of the gate, you've got a qualifier. Out of the gate. What happens? Well, does the market ever go lower? That's where your sell stop is resting. The answer is no. 1, 2, 3, 4, 5, 6. Now I can tell you guys what I was doing. I'll tell you about that in just a second. It never went lower for this one over here to be filled. 1, 2, 3, 4, 5, 6, 7. Never went lower, so you're never getting short based off of the first qualifier. Here's the score. Once the market tests the other side, this almost closed on the top band, which would qualify for a counter trend trade to go long. It did not. But since it tested the top band and we're in a bear territory, I was using the SMA as a qualifier. Just like I'm using the bottom band, I'm now using the SMA because this is a trend following trade. And we closed right here. I should have had a circle on this. My bad for not doing it. This is a qualifier. That's a qualifier. And the next bar goes lower, I get filled. Now in this first 5-10 minutes, you guys know how the market is often very wacky, all over the place. Sometimes you have just giant bolts up, giant bolts down. In this particular example, this was yesterday, right? 14th. Let me just confirm that. Yeah, 14. It was all over the place in the first 15 minutes. First 15 minutes is going to end right over here. So look at that. In 15 minutes, it's down, it's up, it's down, it's up. Well, I got short. And when I got short, my protective stop this time is going to be above the top band. And it took me only 1-2 minutes. It looked like I was on my way. I was looking to see if we'd break the low of the day. Came so close, but it flipped up against me. And you can see what happened. I got stopped out. Now, coincidentally, after I got stopped out, the market qualified for a long. See the bar closing up here above the top band? But you're not getting long because the market does not go any higher. So it qualified, but it didn't get filled. 1, 2, 3, 4, 5, 6, 7. After this period of time, and it's not going higher, you're canceling any buy stop you have working up here. Market comes down again. It qualifies for a short. Now, I can't tell you why I don't know if I was looking at this market. I'm not sure what I was doing. Maybe I was trading another market. But this one right here qualified. There's the, oh, I know why. That's the qualifier. It goes lower here. That's where you're getting filled. And again, it gets stopped out. And the place where it's getting stopped out this time, you're going to go up above this SMA, probably right about here at the top. So tough market. This is the mini Dow, micro Dow rather. And out of the gate, just look at the end all pattern, just wavy up and down. It's not until later over here that I came back and looked at it. I think I walked away from the Dow and probably went over to the NASDAQ. Whatever, I don't know if the Dow was leading or lagging. It probably was not a leader or a laggard. It was probably getting outpaced by the S&P or the NASDAQ. I'm going to guess the NASDAQ. And I went over to the NASDAQ, but then I came back to this market and take a look at what's happening. It gets qualified right here, right underneath the bear, right underneath the bear level. It qualifies. I get long. Looks like I doubled up on my contract here, right underneath the bear, and we break through it. Looks like I might be in trouble. I got a protective stop right below the SMA. Trail, 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 trail. And it breaks through and it takes out the high of the day. That's where I hit my first profit. I take some money off the table. And then look what we have here. Overbought markers. Joe was just talking about those. Overbought. I have my stop that was down here. Trail, 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 trail. I get the overbought markers. I'm bringing my stop right up underneath, locking in profit, protecting myself, recognizing I've got an indicator telling me, hey, this market might be coming off. It's struggling. It's overbought. And that's exactly what it does. It goes into the neutral trade zone. Then it pops up. Then it comes down. Then it pops up. This was the last one that I covered. I must have had my stops split. I'm guessing I had a stop here and I had a stop here. Or maybe I was just trailing. It looks like I was trailing and it finally got hit. So I covered some of it when it came back in. And my simple moving average stop, which I refer to as a lazy river trail stop, ended up getting hit, and as you can see, it never did go higher. In fact, it looks like it came back down at the end of prime time. All right, Mark, I'm going to give you one more shot, man, because I know it looks like you called in. I just sent you an audio pin. I'm going to give you a shot to talk about your trade that we had up earlier. And it says attendee can't be unmuted until they enter their pin. Yeah, so Mark, type that pin in. And let's see if you can unmute yourself. And while he's doing that, or trying to, I'm going to go back over and scout that copper. Ooh, look what's happening, guys. Now check this out. Remember how I missed the trade originally? Remember how I missed it originally at the top of the show here? Got another shot at getting in. Market's gone neutral, and it's coming back as we speak to weakness. I'm just waiting for it to turn purple. So I'm going to bring my stop down, wait for a purple candle, and I can bring my stop up, and let's see if we have our second qualification here. I want you guys to see the accelerators that are above these candles. Joe, why don't you talk about those accelerators?
Absolutely. Hold on, let me get that screen back up. So there we are in bear zone 2. And when you see those numbers on top of the candles, they're shorting. You know, you're looking for shorts. 5 means the strongest out of the 3 different numbers. It's 5, 3, and 1. So 5 is a signal of potential acceleration beginning. 3 means it has accelerated, maybe slowing down, you may be late, and 1 means it's exhausted for the time being. It's probably going to go into consolidation mode.
Yeah, guys, I don't. It's a good story I like to tell. When I first joined Joe back in like 2000, I don't know. I think we really started doing something in 2003, 2004 timeframe. I used nothing but the accelerators. I used a strategy where I was literally waiting for the market to go from bull to bear or bear to bull, give me a 5 accelerator, and I was looking for a 2-to-1 ratio of risk to reward, and I called that Gnostic trading. Pretty simple, really basic, really easy to teach. Truth be told, decent results.
Yeah,
Yeah.
with that, with when you take trades 2-to-1 or 3-to-1, you can make money being wrong half the time.
Yeah. Yeah, I mean, guys, if I get short here, okay, what's the distance to the stop? I can put a stop on the inside here, or I can put a stop to the outside level. Now, this is going to be the ideal one, right? Think of it as a couple shields. It's going to have to break through a couple barriers. Those were once supports, okay? This is support 1, and this is support 1B. The reality is now is it's got to break those. It's got to break those, and those are now, in my eyes, those are now resistance levels. So what's that? What is that risk? The number of points, and just eyeballing it, 28,881. I mean, I'm not going to do the math right now, but you guys get the gist. Well, what's the reward, guys? This is easy to eyeball. That this is a 1-for-1 at best. It's not ideal, and there it is. It's not ideal.
I don't think it's a 1-for-1. I think you're going to make 1 to lose 2.
Yeah. So here's what I'm going to do as a happy medium. You guys can see I just brought my stop up. We're toggling back and forth. I'm going to bring my stop up to get filled. I'm going to place my limit order here as well. You know what's funny is I did a copper trade for you guys last week on Wednesday, and we made money on it. And here we are again. So I've got my target down here. Now, instead of placing a stop up here, okay, on the inside, because that risk reward doesn't make sense, it's going to lower it. Bring it down. Okay, and I'm going to go above where this channel high was earlier. Look at that. We just got the target, guys. There's a profit target on a box trade within a minute. How cool is that? How cool is that? I mean, I didn't think it would be that fast. Only turbo scalp trades really go that fast, but you guys just watched a 1 lot get filled short at 28, 28.76, 28.67. Took 9 points out. Take 9 and multiply that by 25. That's what I just made. What is that? 275? There's 275, guys, in, God, a minute? That did not take long. Pretty cool. Any questions on that? Now I know people right now are going, no way. How did he make that happen? Guys, this is a live market. Check the bar timer. Check. This is not a playback market. This is live. Check my clock. It is 9:02 and 59 seconds. Go look at a chart at 9:03 and you'll see what the market is doing for copper, the September contract. If only they were that easy every time.
I looked away.
Did you really?
I looked away. Full trade.
Can't do that, man. Rick, you're asking, does the Logic Center worksheet work in prime time other than the U.S. sessions? For the London session, yes. U.S. session, yes. Asian session, I mean, yeah, the answer is yes to all of them. It works a lot better for the London and the U.S. You're not going to have as many things stacked in your favor. And here's what Rick is asking about, guys. He's asking about this worksheet right here. In fact, let's do it. Let's talk about the logic for copper right now. This is one I did earlier for NASDAQ. So here we go. I'm going to try to see how many things are stacked up in my favor for a copper trade. What's the sentiment right now? Sentiment is it's been mixed to conflict. Okay, so mixed, I want to be trading gold, crude, gas, and currencies. Copper's not on here, but copper's a precious metal. Copper is associated to gold. And guys, something you got to know for the Asian session, man, you got the Asian session and they love to trade copper. They trade a lot of it, and it's just one of those prime times for the market. Copper, the good one here is the Asian market. Well, so sentiment is in my favor. Trend, it's a trend following trade. I'm selling in a bear zone 2. Is it a laggard since I'm selling? Is it one of the main laggards? So watch what I'm doing. I'm pulling up the RQ Tech. I did this before we started the room. I shared it with you again. I'm going to click on net change to show me all negative. Ladies and gentlemen, your biggest lagging market as we speak, copper. Right there. Red, red, red. That is your biggest lagging market. Give it some cred. RQ Tech is simply consistent across the board. Location is not ideal. This is the second bear zone. So I'm not going to give credit there. And as far as volume and reporting, well, it's 9:05. I do remember telling you guys that there was some reporting happening at 9 o'clock. Did I not say that? I think this guy named EP said, hey guys, something happening at 9 o'clock. You might want to take a look and pay attention if you're going to be trading tonight. Let's see if I was right on that. Wednesday, 9 o'clock. Yeah, inflationary numbers. Money comes out of currencies, goes into metals, vice versa. Okay, so let me just reload this guy. And let's take a look. 9:30 has come and gone. Expectation was just a little bit short of the expectation that they were looking for. And you got more numbers coming out of Australia at 9:30. That would be a market you might want to start looking at to trade. So when you add up the logic, we got the technical indicators, that's half of it. The other half is the logic. This was a 4 medium probability trade that just banged out $275 in less than a couple minutes. Guys, you know what that is? That's like a good, nice little down payment to get you up and running on what Joe and I have produced. And we got some great stuff coming your way here. So here's what I'm going to introduce to you guys right here, right now. We have the lab. That's 5 days a week. Kick up the room at 9:15. I'm going to tell you guys a story right now. I probably shouldn't be telling you this, but I'm going to tell you. My alarm went off. And Joe's going to laugh when I tell the story. I'm in California. I'm 3 hours behind, right? So for me, I'm starting the show at 6:15. Guys, my alarm went off today at 6:15, and I slept through it. No, I'm sorry. My alarm went off earlier. I slept through it. I woke up at 6:18 and bolted down to the man cave to get the show going. And so preparation for today's room, I hardly had any. I don't expect you guys to be able to get all this stuff in a day or two or a week or two. It's going to take a few months for it to really gel. That's why we give you guys access to the room. That's why we want you guys to get into the workshop, pick up on these little, what I call nuggets. If you can learn a nugget or two and take it away and use it and apply it, and then watch me use it and apply it, it'll all click. You guys have heard the traders that come on and talk about it. And I'm sorry we couldn't get Mark's audio going tonight. But Mark, maybe next week. But get in here, look and learn. The reality is we want you guys to qualify yourself. Okay, qualify yourself. We've got different routes for you to become a quant. Some of you out there just want to be a fly in a wall, watch, listen, and learn. That's our trade lab. That's our trading room. There's a monthly membership for that. just like you have a monthly membership for your Spotify and your Netflix and your car payment and other things you're having monthly payments. Same thing. Easy. Stop it at any time. Come back. Stop, start, come back. Doesn't matter. Some of you, after maybe 6 months, will go away, stop. Some of you have been following Joe and I for a long time. God bless you. The second option is for those of you that just want the full package of indicators. You want to pop them on your NinjaTrader tomorrow. Dependent on NinjaTrader, works on NinjaTrader 7. I'm not turning over to NinjaTrader 8 anytime soon, and none of you should either, okay? All these indicators, everything that I've shown you, I've talked about, that Joe has shown you and talked about, is part of that RQ trading technology in the middle. So we have that package available for you. You just want to buy that, start trading, and have it all lit up tomorrow, we can make that happen. Those of you that actually want to be serious about becoming a quant trader and are right now looking for a way to, complement whatever income you have. Some of you I know are out of work. Some of you have a job, but it's not paying the bills. Some of you want to add a little bit of extra money. Look, this is not something that you quit your day job and do no time soon. I certainly haven't, and I certainly won't. Why? You don't need to. You don't do this all day. You guys know I only trade for a couple hours. That's it. Then I'll come back in the afternoon, do a quick scope. If there's something there, I put it on. Sometimes in the evening, I'll scope the market. Sometimes I'm too tired, I don't want to deal with it. Sometimes I'll hear a report, I'll hear that something's going on. Hey, new report on Moderna, go check it out. Hey, Trump said this, Trump said that. Hey, Europe is doing this, Europe is doing that. Yeah, that might affect the markets. I'll take a quick look. Sometimes I just don't care. But the morning is when I'm looking, and that's the time that I dedicate myself. The quant trading course is going to be packed with videos for you to unlock. Lock yourself like you binge watch Breaking Bad inside of your room for a whole weekend, or stretch it out over the month. I don't care at what pace you go. You can watch a video at a time. It's all of the workshops that I've ever done. Joe's got some in there as well. Basically a dozen workshops for you to watch, take notes, ask questions, and we give you a coaching session one-on-one. And you come to these workshops, you go to the trade lab and you talk to us, and that's how you're getting your coaching. And you'd be pretty damn impressed by what small fee it takes to get that going. Okay? And we work with you. There's options. There's discounts available for those of you that can pay up front, and we'll work for you for those of you that need to have a payment plan. We get it. So professional coaching, access to everything you've seen this show and talk about tonight. You learn how to do those box trades, those turbo scalp trades, even some swing trades. And by the way, do you see how it doesn't say futures? Guys, what do you want to trade? Do you want to trade equities? We got you. Do you want to trade futures? We got you. Currencies, cryptos. There's nothing here on the screen that says only one particular market, only the S&P. Anybody out there that only trades the mini S&P, run fast. Only gold, only crude, run fast. It's my 2 cents. So guys, appreciate you guys coming in. I know that there's been some questions. I'm going to go ahead and take some of those. Joe, if you want to help me with the questions, we'll fire off those out loud. Joe and I will knock those down for you. Let's see, Rick, I got yours. Dennis, I think Dennis did. Joe, did you take care of Dennis? What is the indicator called that makes the white line move on the high of the day? Oh, what is the indicator called that makes the white line? That's the open, high, low, close. And what I do, Dennis, is I make the open and the close transparent. I just want to see the high and the low. And that's a free indicator in a NinjaTrader. Okay, so that's the open, high, low, close indicator. That's a free tool. Dennis says EP is a happy man, made 275 in 1 minute. Most people would love to make 275 in 1 day. Yeah, no doubt, dude. Thank you very much, Dennis. And I'm not gloating. It's just like, yeah, I mean, this isn't hard. The hard part is just believing in yourself and being patient. That's the hardest part of trading. That voice you get in your head, that's called head trash. You got to put that voice away and you got to just step up. But you can only do that if you trust yourself, and you only trust yourself if you have been doing something long enough and you know the system, you know the process, and you're consistent, like shooting free throws. Why did Shaq suck at shooting free throws? Because he never practiced enough. He didn't listen to his coach. Don't tell me it's because he was 7'3" and had big hands. I know plenty of big guys. Why is Anthony Davis able to hit his free throws? Just as tall as Shaq, just as tall, just as big, bigger unibrow, bigger eyebrows. I can bag on him because he's on my team. But the point is, dude practices all day long, and he can put the ball in the basket. Dennis just said housing market has exploded due to people moving out of apartments and cities. Houses go up, copper needed. Oh, good. Look at this, Dennis. Dennis providing some love on the fundamental side. Dennis says housing market has exploded due to people moving out of apartments in cities. Housing goes up. Copper needed for a lot of the plumbing. That's right. Copper is directly associated from any global housing number on the planet. Housing moves, copper moves with it. It's that thing inside of your walls.
It's part of the risk on.
That's right.
Or group.
Hey, Mark, don't worry about it, man. I'll get you next week. We'll bring Mark in. Just one thing, Mark. You got to put a good trade on between now and next Wednesday. No pressure. Oh, man. Joe, did you get Kevin taken care of?
Yep.
All right. Kevin, are you good to go? Are you flying? Check it. Some good banter going on in the room. All right, cool. Setting up Ninja 7. All right, great. Well, listen, guys, I know it's late for a lot of you guys. Thoroughly appreciate you coming in and being with us. And for those of you that watch the recording, contact information, there you go. You want to get started with the indicators, we can make it happen. Shoot us an email to support@riosquant.com. You want to start talking about packages and pricing. You just saw the packages. You want to start talking about pricing? I know that this guy, he's a cool cat, and he'll even talk to you tonight, and he's on the east side. Nothing keeps him awake at night except for him counting his money. You guys can talk to Tim. He's a good dude. And just reach out to Tim at riosquant.com. And then the last one is thetradingroom.com. My only ask, and the reason why I have it up there, is I ask you guys to spread the love and send it out to somebody that you think needs some help with their trading. Pay it forward. So with that, I'm going to say good night to you all. I'm going to say good night to you, Mr. Joe Rios. And
all right.
We'll do. I'll see you guys all back here in about 12 hours.
You got it.
All right, guys, stay safe. Thanks for being with us. On behalf of everyone at the trading room, myself, Joe, and Tim, we'll see you guys tomorrow morning. Take care, guys.
Bye.